1.
Welcome back, everybody, to our #1 best trader competition. This is our fall intermediate competition. This is our week 2 review brought to you by Dash Trader and Nasdaq. My name is Michael DeGioia, and I am the Director of Educational Services here at Dash Trader. I'm also a licensed professional, and I run some of the institutional sales here at Dash. I'm joined by my co-host, Jill Malandrino, Global Markets Reporter at Nasdaq. Jill, how are you?
Good. How's it going? Good to be back with you guys
again. This week, right?
It has been an incredibly busy week, particularly on the IPO front, but it's not even just a busy week, but a record year. Over 770 issues came to market.
Incredible.
Through the end of Q3, and I think Nasdaq has won over 500 of them. I don't know the exact number, but the fact of the matter is the deal market has just been on fire.
Yeah, so I have a question about that just before we jump into our regular news. Is that a positive indicator or a somewhat kind of like neutral to bearish indicator, as it's kind of the people who are entrepreneurs kind of cashing out, going to the public capital markets to kind of cash out? I mean, I know many of us think about IPOs like, obviously, but it's the entrepreneurs and the founders cashing out to a certain degree, or raising capital for their business.
Right. So I would say neutral to positive. And there's a couple of things that are to take into account here. You have the volume of SPACs that you have to factor into it as well. We've also seen a number of direct listings, which is a little bit different than the IPO process. It's not that you have an underwriter providing, finding the price for you in the shares. That's more of a way just to have liquidity in your shares and be able to get to market. I think from the lens of the way we look at it, I think it's the type of companies that are coming public, and they, or you always have your healthcare and biotech names, but the kind of technology companies that we're seeing come through, whether it's fintech, whether it's big data, whether it's newer technologies like AI and machine learning, the level of innovation that has been coming through is really what's interesting. I mean, we could have the debate about how these are priced and, money left on the table and all that. Obviously, from an exchange perspective, I can't comment on that. But I think the fact that you're seeing companies access the capital markets via different products, whether SPAC, direct listing, traditional IPO, it is exciting in my mind. It offers more options. It offers retail investors the opportunity to participate in these kinds of companies. I also think that you're seeing new products around private markets and liquidity. So, if you look at it through the lens of what kind of companies are coming public, the innovation behind them, and the different offerings of product, I think that's good for the marketplace.
Yeah, absolutely. I mean, it's kind of it's a very, very interesting situation for the retail investor, right? Because the retail investor, probably did not really know too much about SPACs going into the last 2 years, but SPACs have certainly been some of the best performing in some cases. I mean, some of them have done incredibly, incredibly well, and others have done mediocre. But I mean, certainly there's a tremendous amount of innovation, and it's a very, very dynamic capital market.
And Mike, if I can just make one point to follow on what you brought up about retail investors, I can tell you, besides being in the markets for 25 years, 10 of that on the financial media side, this is the most that I've heard about retail investors, not just because of the meme stock craze in the first quarter and even continuing until now, but the STA conference, the 88th STA conference was last week. I covered it virtually, and every single guest I had on mentioned retail investors and how market structure relates to them and how they're developing products to satisfy the needs of retail investors. I have never heard that much around it than I have in the past couple of months. I had a trading from Baird on my show today, and that was what we focused on: retail trading and market structure. Mm-hmm. And I think the industry typically hasn't focused on them from a product perspective, but if you were to draw those diagrams where the larger bubbles indicate the topics that are discussed the most, I would say in the past couple of quarters and going into the fourth quarter, retail investing is probably one of the bigger bubbles on my coverage chart.
Oh, very interesting. That's definitely an interesting and in some ways a good thing to see that the retail investor is getting themselves educated and certainly are being more proactive and not always just looked at as dumb money. And they're actually became a force to be reckoned with, which is good. That's the investor class that we're talking about here, the investor class. So on that note, we just kind of got this week, we've gotten a big spring back in the market. We had a nice snapback over the last 2 days. I guess some of that has to do with the potential short-term resolution of the debt ceiling crisis. The question I have is that what will it be like in December when we have to deal with this issue again? Do you think it's going to be handled better, or is it going to be the part two of the sausage making conference that we pretty much saw? There's the old expression from, I think it was Chancellor Bismarck from Germany, who said that politics is like watching sausage being made, which is something you probably don't want to see or experience. So I'd love to hear your thoughts about the upcoming part two of the debt ceiling negotiation. What do you think that's going to be like in December?
Well, probably a lot of what we saw in September. It's going to clearly have a lot of political grandstanding, and we'll see how well both sides can come to compromise. It's pretty interesting. President Biden kind of ran, part of his platform was he has always been a politician who's been able to work with both sides. And I feel because of our political environment and some of the decisiveness that we have, it's been really challenging to, marry the both of them to get deals done. So I think it'll be a challenge. I'm sure it will come to the 11th hour. It will either be resolved or some kind of can kicking will occur. But I'm sure we'll be discussing this in December as we go into the end of the year and we talk about, year end and forward looking thoughts. So it'll probably be somewhat the same conversation in September. I hope I'm wrong, but
we can always hope for the best and see how it plays out. I mean, something that seems to be that we've been talking about continually as well is the ongoing supply chain issues. My question to you, I mean, we're having a great earnings season. So far earnings season has kind of busted out to the upside. We had some great earnings from some of the major banks. And certainly even Alcoa came out with some really good earnings. I mean, they actually are paying a dividend for the first time since I think it's either 2015 or 2016. So with that positive earnings story going on, my question is do you think that the debt ceiling part two that we have hanging over the markets in December, plus the possibility of supply chain problems going into Christmas? I've already seen a number of companies warn that, you better order your Christmas presents soon because they may not get here for Christmas, kind of a situation, or you may face empty shelves going into Christmas. What are your thoughts? Will the supply chain problems be the Grinch that stole Christmas, the Christmas rally?
Yeah, I think there are certainly issues there, but Mike, I just want to make one more point to piggyback on something you said when we were talking about deals in the IPO market and so forth. So, I mean, you heard Goldman's numbers this morning. They were insanely amazing. They just
unbelievable.
They crushed revenue by $2 billion. But where they really exceeded expectations, they came in with $3.7 billion in investment banking revenue. Well, what is that? M&A and IPOs, right?
It's IPOs and M&A, absolutely.
Increase year over year. So, to your point about the new issue market being on fire, well, there you go. It's showing up in the numbers. But back to supply chain issues, I think I feel as if we've almost come to a head with this as companies are looking to privatize their shipping. So, Walmart, Target, Amazon, they're kind of, coming up with solutions on their own to satisfy the demand that's out there. But it's gonna be a challenge. I mean, we have not only containers sitting in the ocean, but we don't have enough transport to get these containers to where they need to go. So, it comes back to labor shortage. It comes back to a lot of demand, and demand's a great thing. But, when you couple that with supply chain shortages, then you have to offset those cost increases somehow. So I think it's going to be pretty difficult. I feel like for retailers that we associate with the holidays, whether it's clothing, toys, I'm glad my kids aren't young anymore because I know the toy issue is going to be pretty bad. We heard, a couple of toy companies already talk about that. But it's interesting. Some of automotive part suppliers, I had carparts.com, the CEO, Lev Parker, on my show. It was a great interview. We had him on this morning and talking about how they're mitigating those supply chain issues. And it seems to be companies like a carparts.com, a Tesla. I feel like they're always focusing on their supply chain. So they've kind of, have been thinking of these risk scenarios. But I think when you have retail that's very seasonal, they have to order their inventory, seasons in advance. It's going to be pretty tough.
Makes sense. No, it absolutely makes sense. I mean, it seems like there's been a trifecta of supply chain issues. Obviously, it's been, there was that Panama Canal, which, I mean, shockingly, somebody brought up to me today that this gentleman was doing some renovations on his home, and he said that his container with his windows or whatever were stuck on the other side of the Panama Canal, and that they're still literally waiting for the backup shipping from that ship that was stuck in the Panama Canal months ago. So I mean, literally, it's the trifecta of issues. There's all kinds of trucking issues. There's all kinds of semiconductor shortages, and then of course there's just shipping containers, which have skyrocketed in price. I think it's something like from 3,000 to 30,000 in shipping container cost from China. So very, very interesting trifecta of problems coming into the supply chain. But additionally, oil's been hovering around $80 a barrel. But I mean, the question is will we hit $100 barrels? I mean, at $100 a barrel. I mean, the from a trader perspective or technical perspective, we say, you get to $80 a barrel, you're going to get to 100. It just wants to tag that number. And I almost feel like I'm singing a song by Justin Bieber, but it's like inflation transitory, maybe not so transitory. I mean, it doesn't seem like inflation is going away anytime soon. Certainly not this year. What are your thoughts on inflation and the possibility of $100 a barrel oil and what? I mean, all of these things are like dark clouds hovering over the market. I mean, yes, we have phenomenal demand, which is because it's pent up, but debt ceiling issue moved back to December. Supply chain problems still there, possibly the Grinch that stole Christmas, possibly $100 a barrel. Oil becomes a negative correlation above $100 a barrel on market activity. And of course, we have the continued specter of inflation, which is no longer a specter. It's actually an actual physical issue we're dealing with, especially in the food chain. So what are your thoughts about these kind of, what does that have? What impact does that have on the markets going into the end of the year?
Right. Well, I think the biggest issue is going to be on inflation, which is, everyone's concerned. And to your point, it's just the perfect storm leading up to it. So we have supply chain issues, we have lack of labor, and then also, I also think the optics around it too is we've been making such a big push to focus on green energy that did we not think about living in the now, and is there not enough supply? So that's kind of like a tin foil hat, philosophy, I guess, if you will. I'm not quite sure if that's really the case. I don't know enough about it to firmly say that, make that a true statement, but that's some of the pushback that you're hearing. Okay, we know where we want to be from a climate perspective, and there certainly is a huge push out there to make it achievable, but it's not something that's going to happen overnight. So I wonder if that's part of the issue also.
Yeah, I mean, I looked at a recent graph showing the worldwide energy consumption. I believe that based on what I saw there, it was like something like low 20% coal, low 20% natural gas, and then 40%, petroleum, which leaves 10% to nuclear and hydro and 10% to renewable energy sources. So the vast majority, 80% of world's energy consumption is still, coal, natural gas, and or petroleum based. So, I mean that, in the short term, you can't quite, you got to bridge the short to intermediate term as well as making long-term plans for the future. And that was a chart that was projected out to 2030. So, I mean, it didn't even factor in, it was like projected out 10 years from now. And I think that from what I've read, there's a lot of coal shortages going on in China and places like India, et cetera, that there's a significant shortage of coal, which is where they still get a lot of their energy. All right, well, now we jump to the fun part. Okay, we're kind of through our news for the moment. Let's jump in and see how our week 2 competition is going. This is the week of October 11th through October 15th. Okay, number 1 best trader, best 507, has taken a firm lead with $13,775 in total gains, even though they did not trade today. So, I mean, look, this is an interesting tactic. Our top 3 traders did not trade today. So we had no change of statistics between our top 3 traders. We had total gains 13,000, 10,000, and 5,700,000. Certainly, there's not going to be any movement between the top 3 if they're all sitting back and holding firm. Our number 4 guy pretty much knocked himself out by trading today because our number 4 trader, this is best 574, would have been number 3 had they not traded today. And they traded, that's $2,553, took them from the number 2 spot, number 3 spot, and put them into the number 4 spot. We have slow and steady number 5, making 192. Green, and I'd like to point this out. I mean, this is very interesting. We have 7. We haven't had, I mean, last competition, which was a very difficult and volatile period in the market, we had, only like really the top 3 or 4 traders being in the positive column. But now in this day trading competition, we have top 7 are all profitable in green. And our next, 8, 9, and 10 are kind of just nominally red. And certainly here, if you look at best number 495, they are slowly, kind of chipping away back in the green direction here with $127 worth of gains. So just your thoughts on the overall competition numbers.
484, I mean, they got out of an $8,700 hole. That's pretty incredible. That's got to be your I don't know if it'd be the largest dollar gain for a day, but certainly on a percentage basis.
I mean, that's an incredible hole. I mean, the fact that they just got, they were, that means that they were down
like $8,700 or whatever.
Yeah, $8,700. Yeah, it's quite a swing.
Well, good for them. But you know what, Mike, it's so interesting. I felt like the desk was a little bit light today. A lot of away messages, a lot of my counterparts at Nasdaq on the marketing side. Is it a holiday?
No, it's not. It's not a holiday, but it did certainly feel like, I mean, me personally as well, I was, doing some of my normal activities, and I found a lot of people with, I'm away from my desk. It just might be that everybody takes Fridays off now. I mean, I don't know.
Well, the weather's pretty ridiculously amazing. It's almost 80 degrees in New Jersey today. I think it's like our last push of, last Indian summer day, because we go into like the low 60s next week. But yeah, believe me, I was really considering if I didn't have kids in the afternoon.
That's something, that, me and a couple of my trader buddies had gotten together this week. And that was exactly what we said. They said, we feel like the seasons have changed. Like it gets warmer later and stays warmer later. Like September and October felt like summer this year in New York. Like, I mean, walking around shorts, t-shirt up until, here's the middle of October, which is very, very unusual. So let's jump right in. So I think people just took off and enjoyed the beautiful weather today. That's my thought. Because God knows in New York, I've seen the chipmunks. That's my Michael DeGioia chipmunk indicator. The chipmunks have been busy as ever. So let's talk about some of the top stocks, and I'm going to bring up my charts in about 2 seconds. But here are the top 5 stocks. And if you have any interesting news to speak of on any of these, I'd love to hear your insights if they've come across your board. But number 1 for today was JSPR. Okay, JSPR. It's kind of one of these one-hit wonder stocks. It's in and around $17 a share. We have SNOA, a $6 one-hit wonder stock. We have Plug, which is one of my old favorites. It's a very, very active stock. It's an energy company, Plug Power, and it's at around $31 a share. We have LMFA, and that almost looks like laughing my something off, but I mean, certainly. But certainly it's an interesting ticker symbol. And that was number 4 on our leaderboard, another one of these one-hit wonder stocks, and an old standby, Marathon, Mara, as we call it on the trading desk, another company that has been very, very actively traded. As we go down the list, I mean, we see a lot of, SPCE is another one, certainly Alcoa having earnings this week. Some of the earnings stocks are being played. Apple, certainly always interesting, certainly up there. We have the Russell Index, the IWM, AMD, our old standby. AMD always gets up there on the leaderboard. NVIDIA, and Snow's, and one that I've seen traded pretty actively as well, and been up here a couple of times. So certainly some stocks that we've certainly recognized. Riot is another one that people like to trade. So what are your thoughts on some of these stocks that we see the participants trading?
Right. So Jasper, I know they were initiated at Oppenheimer this week with the initiated coverage actually with an outperform rating and a pretty decent price target on there. So that was that. Plug Power, they had an announcement with Phillips 66 this week to deploy some of their technology into Phillips 66 as it looks to, transition to more green, zero emission aircraft to market by 2035. So you can see that there. Mara, it's Mara Digital. So because Bitcoin has had quite the run and it's a digital mining company, no surprise there. SNOA and LMFA, I don't know them, so I can't really speak to why they were. SNOA, I think, is like a $12 million market cap. I've never heard of it, to be honest with you. So not sure what that's all about. But for
one-hit wonder, it seems.
Yeah, it's so interesting because you always take a look at how these companies describe themselves as global leaders and whatever they're doing, but 12 million market cap could suggest otherwise. But that's how biotech is as these newer technologies get developed. All they need is one good hit. All they need is someone to acquire their technology. So who knows? There's obviously someone out there smarter than me who made money on it. But
yeah, well, it certainly seems like that one guy, number 4, that made up $8,000 in one day. I mean, he caught something in the right direction.
Honestly, I've just been focused on my crypto this time.
Well, let me tell you something. That's one of the things that we're going to take a look at. Is we actually on this show said that Bitcoin and Ethereum were getting ready to look like they were technically getting ready to make a run. And I'm going to take a look at that in a few minutes. Let's just jump in and see JSPR. So JSPR is, basically it's like I had said previously, it's a one-hit wonder. It's recently spiked from $7.50 all the way into the $17, $18 area, which explains why our traders are trading it. I mean, in the last 4 days, this is probably one of the highest beta stocks that you could possibly have. It's gone from $7.50 to as high as almost $19. So traders love volatility, and this is certainly one that they are trading and taking advantage of that volatility. SNOA made a huge gap up from the 590 area all the way to $7.10, and then faded down quite considerably. This one was a big gap fade. Apparently, it was shortable because it looks like that one you probably only want to trade it on the short side. I mean, this stock is like the gap fade from heaven if you were able to locate this stock and catch it to the short side. I mean, pre-market, it was up as high as 780. When the market closed, it made a little bit of a gap fade, and then, it made a little bit of a gap and go, and then faded the rest of the day. Pretty much straight fading all day. Plug, over the course of the last couple of days, I mean, really a beautiful run up in the beginning of the week, and then a breakaway gap, and then kind of starting the gap fade as the news has been digested. Very, very big volume week for plug. But as you can see, we have a pretty significant level of resistance here on plug. So you got a pretty big daily level of resistance up here in the $35 area. So we're probably going to fade a little bit, but so I think we'll probably see plug next week on our most active trading as well. It's certainly far from its moving averages, but it's done a great job of breaking out from the $24, $25 area all the way up to the high, mid to high 30, well, mid 30s, low to mid 30s. Let's take a look at LMFA. I mean, this stock looked like it was going to zero, and then it gapped up pretty considerably today. When we put on the 15-minute chart, looks like it had some news events and just like took off, blasted off yesterday. Really, really powerful. And then today was kind of the digestion day after that big run yesterday. Let's take a look at Mara. I mean, just up and away, riding the kind of crypto wave. I did see Riot on there as well. Another very similar chart with Riot, another one of these crypto related stocks. Let's jump to take a look at Gbtc, which is our crypto ETF. And I always look at this, and this is why we had mentioned it a couple of times in the past couple of weeks. So we bottomed out here on at $26 area on GBTC back in July and early August. And then what we did was we put in a low, a double bottom, and then a higher low. And that was really the point where I mentioned it a couple of weeks back, was because we had put in that higher low and rejected a move down. I mean, if you look at this pattern where you see a low, a lower low, and then a higher low, and I'm just going to draw this with trend lines just so everybody can see it. I'm just going to change the color of this. And I always like to point out how good DAS is in terms of drawing on your charts. But you can kind of see it's made this kind of scooped, almost like a cup formation, where this looks like it potentially might be up and away, because if we can get through this little area of resistance at the prior high on Bitcoin, then GBTC will certainly get through its prior high. And it's not just on Bitcoin, it's ETHE, Ethereum. Ethereum has been putting in these kind of low and then higher low as well. I mean, Ethereum has had a tremendous run. Ethereum potentially could break out, here as well. So I mean, both Bitcoin and Ethereum, I would call the two majors, both looking very good on a technical basis, putting in lows and then higher lows, rejecting breakdowns. And really, if they break out above here, I mean, we're back into clear air territory. We call that a blue sky breakout as far as the markets go. And in terms of the stock market in general, if you take a look at the S&P has that same kind of formation. It's almost like an inverse, reverse, head and shoulders formation, kind of forming this cup for the markets to potentially go higher. So from a technical perspective, we are heading back to the highs, both on the S&P and on cryptocurrency. So as far as those asset classes go, and it's not just the S&P, it's the Nasdaq as well. I mean, every single indicator. I mean, certainly we had an attempted rejection, attempted breakdown, but the buy the dip crowd seems to be back in force. The buy the dip crowd, we did not violate the trend line. So if we draw this trend line out, I mean, we clearly still have a trend line in effect. I think that you kind of have to stay bullish as long as you have railroad track moving averages moving to the upside, and you have no trend line violation. So your thoughts, Joe?
I can't see what ticker this is. What is that?
This is actually, I was just looking at the QQQ.
Oh,
I mean,
okay.
just we're talking about the markets in
No,
general.
I know, I see it. It's so tiny on Zoom, I couldn't read it. Yeah, regardless of, and you and I have spoken about this before, work from home, work from anywhere, you have exposure to technology, longer term, that's where you're finding your modern day industrials, and as we call the Nasdaq 100. And, they're continuing to show it. There will be dips here or there, but if you've been looking for opportunities to get in at better valuations, it looks as if traders have been taking advantage of that, as you had pointed out.
Yeah, it's buy the dip, and people are just looking, retail is looking at this as a discount on all the stocks that they like, and certainly have been following. So on that note, I'm going to jump back to the slide presentation. Thank you so much for joining me as always, Jill. I'm going to just wrap things up after I go through our finishing announcements.
All right, sounds good, guys.
Have a wonderful weekend.
See you, everyone.
Bye-bye. All right, so let's just wrap this up today and talk a little bit about the competition and give some good pieces of advice to all of you who are in the competition. It's not too late. You can still bring it home, as we saw from our trader of the day, best 484. It's not too late to become number one. We have a little bit of stagnation in the top three positions. Certainly, you don't want to go crazy and take yourself back a few positions in terms of rank, and you want to keep moving in the right direction and keep moving to the upside. So, on that note, just make sure that you review your strategies, review what's been successful for you. If you've made some mistakes, try not to replicate them. Really review and think about what you've learned so far. And I, of course, invite you for comments, consideration, competition. If you have some things you'd like us to take a look at, market news, things like that, we would certainly love to hear from you. You can email us at info@onebesttrader.com. Competition runs through October 29th, just before the final weekend of the month, just before Halloween. Visit us at numberonebesttrader.com for more information. Follow us on social media at OneBestTrader. And we have Twitter, Facebook, and Instagram. Certainly, if you have not already done so, you can follow DAS and get all of the DAS Trader updates. Subscribe to our YouTube channel at DAS Trader TV. Follow us on social media at DAS Trader. Also, remember, we are on LinkedIn, Twitter, Facebook, and Instagram. Thank you so much for joining us. Thank you so much for participating in our number one best trader competition. And I can't wait to see you next week. Trade well, everybody.